Let's look then deeper down the field here at what the labor agreement, which is going to raise wages rather significantly, particularly in year one, and also I think in year 5, what is that going to do to the company's profitability? How can they blunt the impact of that? Do they have the pricing power? That whole cluster of questions.
Well, absolutely. I mean, we at Deutsche Bank could not be more bullish about UPS's ability to grow profitably. We predict over the next several years, this company will report margins that are higher than they ever have and profits that they ever have. This is truly a win-win-win deal. Just to give you a sense, we can focus on year 1 or focus on year 5, but if you look at the cumulative 5-year effect of this deal, the average labor deal is 3.3% a year. Let's be clear, UPS Teamsters employees are the highest paid in the industry, and they deserve that, and they are getting corresponding increases. But this labor deal and our analysis, I would say we have done more work on this than I think anybody here at Deutsche. And we believe that this is a company that's going to be on the path for profitable growth for many years to come.
And what does then that look like for the share price at 180 right now, Amit?
It's going to go higher. I mean, we have a $212 price target, but let's just break it down. Today, the company trades at about an 18 to 19 times forward earnings. That means this year's earnings. That's a discount to where the S&P is trading at today. They generate over 30% returns on invested capital. They generate oodles and oodles of free cash flow. This is a company whose multiple should expand. And when you translate that to the stock price, Kelly, to your question, we're talking about 19, 20 times earnings expectations of maybe $13, $14, $15 over the next 3 years. We think this company can trade well into the 200s. We have a price target of 212, but obviously that's a 12-month price target. But we don't really see any roadblocks, especially as we enter the second half of 24. We really think the way the labor deal wakes, the curve of the cost inflation really moderates in the second half of 24. And that's why, last thing I'll say is that's why earnings expectations are coming down 10% this year for this company, and the stock is basically flat. And I think the market is telling you that this company is primed for a lot of upside once that curve on that inflation moderates.
All right, Amit, thank you very much. We appreciate your time today. Amit Mehrotra.
And our final name in the earnings rundown is AMC. Those shares are down despite a second quarter EPS and revenue beat. It was the strongest second quarter in 4 years, and this is the entertainment name we should emphasize, helped by a jump in attendance. 66 million moviegoers, highest quarterly attendance since the end of 2019. But my next guest still foresees trouble ahead for the theater chain and has an underperform on the stock. Alicia Reese covers media and entertainment at Wedbush. Alicia, it's great to have you. Not much of a share reaction today either. What do you make of that?
Right. Well, there was a lot of positives to point to in the quarter. I think they had a really nice quarter. They were able to hold on to market share gains that they had gained during the pandemic, even growing year over year on that. And that's despite like a little screen decline. And they're just closing underperforming screens as those, contracts come up for renegotiation, and improving their operating metrics as they go along. Their concessions profitability was greater than, in line with pre-pandemic averages, and that's on 30% less attendance on those against those years. And so as that attendance starts improving on a higher volume of films, we'd expect AMC to continue printing really nice numbers. The overhang, however, is related to the pending court case that still does not have a resolution, and also the Hollywood labor strikes. If they continue for much longer, this could create quite a hole in the release slate next year. And if there's a perfect storm, there's still no resolution, or AMC is not able to fold its APE shares back into AMC, and they'll have some bit of cash issues next year if there is that release slate hole.